So, welcome back, ladies and gentlemen. It's my pleasure now to invite our next eminent speaker who is going to talk about transforming investments in future-fit society. He's the Business Development and Account Director for Asia Pacific of Trucost, S&P Global Singapore. Ladies and gentlemen, please give a warm welcome to Erik Christianto.
So my name is Erik Christianto, and I'm from Trucost. I have the privilege of getting this session right after lunch, so I hope that I can get everyone excited to keep you alert and awake until our next break, which is in about an hour and a half. And in this session, I get a really big topic about transforming investments in future-fit society. So I will focus on the investments part. So hopefully this is exciting enough for everybody. We're very happy to be sponsoring and supporting sustainable brands. We believe in their vision of creating a sustainable future. And that's where Trucost share the same belief, and that's why we want to also encourage companies to come on board this sustainability and ESG journey. Now, a little bit of exercise since after lunch. Just a show of hands, how many of you have heard of Trucost before? There are a few, so it's great. But for those who have not, I have the pleasure of introducing what Trucost does. Just quickly. Next slide. Yeah. We are part of S&P Global. So S&P Global is one of the largest providers of data, ratings, and information that is being used by financial institutions or corporates around the world, mostly to make investment decisions or reporting. For Trucost, we specialize in providing environmental, social, and governance data and analytics. And we've worked with investors representing about $27 trillion in asset under management, as well as a multitude of different organizations, from NGOs, corporates, to government agencies. So including some of the speakers that you have heard today, we do work with them. And our goal is really to encourage companies to evaluate the risks related to ESG and related to climate change, so that they can understand what are those risks and identify the opportunities, so we can accelerate the flow of capital to responsible businesses. Some of the work that we do is to help companies understand the importance of providing accurate information, so that investors and different stakeholders can make use of them to make investment decisions. So why is Trucost, or why is S&P playing in the ESG field? Now, we believe in providing crucial ESG information for the markets. And in the future, we believe that ESG risk is becoming more and more important, and that has financial implications to businesses and organizations, to brands. So I just want to summarize 3 different regulatory risks that are facing us today. Well, first of all, carbon pricing. The World Bank earlier this year reports that there are about 56 jurisdictions, more than 56 jurisdictions around the world right now that has implemented carbon price. Now, we have not seen that yet happening in most of the markets in this part of the world. In ASEAN, only Singapore has a form of carbon tax, where companies emitting above 25,000 tons of emissions will have to pay $5 Singapore dollars per tons of emissions. Now, we expect more and more companies will be subjected to any form of, one form of carbon price, either taxation or emissions trading scheme. And this is because a lot of the governments and a lot of organizations have signed up to global commitments. For example, the Paris Agreement, where we all agree or aim to reduce our emissions to limit our increase in temperature to no more than 1.5 degrees by 2030, as well as Sustainable Development Goals. So some of those global commitments are driving introduction of more regulatory requirements. So carbon price is one of them. Now, the ones that is not unfamiliar to many of us here are disclosure requirements. And sustainability reporting requirements is one of them. And we know 2 years ago, 2016, the Bursa Malaysia has implemented mandatory comply or explain sustainability reporting requirements for listed companies here. Now, that is not unique to just companies in Malaysia. According to the Sustainable Stock Exchange Initiative, right now there are about 46 stock exchanges globally that has some form of guidance on disclosures for listed companies. Now, out of the 46, about half of them has mandated sustainability reporting requirement annually. Now, out of that 24, about 12 of them are in Asia Pacific. Now, stock exchanges like Singapore, Indonesia, and the Philippines also have the same requirements. So those of us listed companies here, well, don't worry, because a lot of other companies out there have the same requirements. About 25,000 companies right now has to report annually. Now, as in any regulations, failure to comply has consequences. Now, today the consequence range from a mere slap on the wrist, just a warning, to potential court case. So things like what the Guardian has mentioned here. Companies could face court for failing to report on gender pay gap, issues with waste ban, etc. Now, it's not all gloom and doom in our future fit society in terms of investments. There are opportunities out there that all of us can harness. Now, first of all, aligning your business strategy and communicating it potentially give you access to finance. Now, some of the information that I've provided here talks about different types of financing products, and I believe earlier this morning we have a representative from CIMB that talks about that as well. And we're talking about giving access to finance across all the sectors. Now, you have Wilmar, for example, and agriculture companies that have benefited from sustainability-linked loans. Recently, maybe just about a month ago, we have an Italian utility company, Italian energy company called Enel, that has put out the first general purpose SDG-linked bond. So SDG is short for Sustainable Development Goals. So what they're trying to do is to use the money raised from the bond to invest in projects that are aligned with SDG. So Enel has identified 4 main goals out of 17 as the material goals, and they've managed to get about 8 banks to bankroll that bond. And it's a large amount. It's $1.5 billion US, and it's oversubscribed by more than 3 times. So the demand for these products are there. Investors, the banks, they're available to provide those financing to you. Now, to sweeten things, the Enel use case, for example, gives Enel potential financial advantage of 20 BPS if they're able to meet all the priorities, all the commitments that they have set out in agreement as part of that SDG bond. So not only are we providing financing access to companies that are aligned with ESG, you can also have a lower cost of capital. Now, second of all, and we're talking about ability to reach new customers. Now, today we have different types of consumers. The millennial groups are now at a working age, so they're earning income. And because of that, a lot of them have more awareness about sustainability and responsible products. And it is showing in terms of their consumer behavior, their spending behavior. We are seeing information from Unilever that are telling us that the growth rate of responsible product is almost twice as fast as their conventional products. Now, this is just not FMCG goods from companies that are based in Europe or in America. JD.com, for example, from China, also reports that there are about 70% increase in their low-carbon goods in terms of sales. So, data seems to indicate that there are opportunities for companies and brands that are aligning themselves to responsible business operations. Now, finally, about product innovation, and I think this theme has been occurring throughout the entire session this morning. We hear the minister talking about the need to have an innovative approach to recycle waste. We hear about how Coca-Cola, Nestle, Adidas, Nike are trying to recycle PET to make textile yarn for some of their shoes. So these opportunities are available, and hopefully it will encourage companies to start looking into aligning themselves more with responsible operations. Now, what about from the investments perspective? We think that ESG is going mainstream. It's no more on the margins. Now, data from the UN Principles for Responsible Investments are showing a steady increase in number of organizations aligning themselves or signatory to the UN PRI. Now, these 2,000 organizations represent about 80 trillion in assets under management. Now, I'm throwing a lot of numbers, but 80 trillion is actually massive. In comparison to Malaysia's GDP last year, Malaysia's GDP is about 320 billion US dollars. So this is more than 200 times of asset under management or organizations representing this amount of assets that are signatory to the UNPRI. And what does it mean? So UNPRI has about 6 principles, but in essence, what they're saying is that these organizations are committed to evaluate their investments on the ESG perspectives, and they would like to also engage with the investee companies to get them to start evaluating ESG risk, communicating the risk, and mitigating those risks. So more and more, we see that coming. Now, out of the total assets under investments, there are about $30 trillion of them that are already aligned with ESG or ESG-linked strategies. Now, the data for Asia, it's quite minimal right now. I had the privilege of meeting with the person who actually put together this data yesterday in Singapore. And he was telling me the reason why this is so is not because it doesn't exist or ESG-linked investments are not present in the market, but it's more because the data is not publicly available. Therefore, they find it difficult. But for some of this data, if we drill down for Asia Pacific, if we're looking at Japan and Australia, New Zealand, the absolute amount may be small right now, but the growth rate is tremendous. For Japan, between 2016 and 2018, we see more than 300% increase in total assets that are aligned with ESG. In Australia and New Zealand, right now, more than 60% of their total assets are aligned with ESG or adopting ESG strategy. So we do see a very, very strong positive correspondence or adoption of ESG information built into investment strategy. And these are some of the data that we get from our own sister company, Dow Jones Indices. Now, there are a lot of data points here. So about 15 of them for the annualized returns of the different indices. What we are showing you here is the back-tested results of the low-carbon versions of the S&P 500 index. So we're talking about S&P 500 carbon efficient index, select index, fossil fuel-free index, etc. Now, out of the 15 data points here, 14 of them are showing overperformance against the benchmark, which is the S&P 500. Only one of them are showing a performance that is below the benchmark. So data seems to be showing that investing in alignment with ESG or taking into considerations ESG information is benefiting the companies and the investments. And why not investing while generating return while also creating savings or environmental reductions? So we see a potential emissions reductions between 18% to 60%, depending on which investment products index that you invest in. Now, the investments are also already happening in ASEAN. Now, last year, the Japanese pension fund, representing about $1.4 trillion in assets, decided to invest in 2 of S&P's carbon efficient index. And one of those indices contained more than 100 listed companies in ASEAN. And I think about more than 30 listed companies listed in Bursa Malaysia. So Malaysian companies are already also benefiting from these asset allocations, amount of money that is invested based on ESG. So hopefully that gives some of us encouragement that the information that you provide, you put out in your sustainability report are actually being utilized. Investors, asset owners, the banks, they are looking at that information. Now, my final few slides, I will talk about the more recent trends. What are some of the ideas that investors are thinking about? Earlier in the slide, I talked about carbon pricing. The idea of carbon price is very important for us to understand the risk of stranded assets. When regulations kick in and introduce carbon price, how would our asset be? Our S&P Dow Jones Indices research shows that these are the different amount of carbon price that different industry sectors would have to face in the future by 2030. So it ranges from $78 for technology companies to $115 for utility companies by 2030. Now, if we look at our own business operations, if we apply this price in the future, will our operations still be profitable? And investors are starting to look at that. Now, there's a very good framework out there called the TCFD that are guiding companies on how to evaluate their own risk in relation to climate change. Now, I know that I have 1 minute left, so I will not talk too much into this, but if you are interested, you should be looking at how this guidance, the guidance provided by TCFD, because it talks about how the environment is going to impact the business in the future. Now, all the reports, most of the reports that we see today in sustainability reports talk about historical performance. How is our business impacting the environment? How is our business impacting the society? But under TCFD, they would like to understand how will our business be in the future, where we have more floods, more risk of forest fire, more typhoons, stronger typhoons. We ourselves, S&P Global, is a signatory to TCFD, and we put out our report about 2 months ago. This report is made public, and what we learned from this exercise is that, number one, we will have significant negative impact to our operating margin if we do not mitigate our climate risk. And number two, the carbon emissions target that we have set is not ambitious enough. So we are relooking into setting a more ambitious target in alignment with the future society, where we hope that we can contribute to minimizing increase in the Earth's temperature to 1.5 degrees. Now, in conclusion, I hope there are 3 takeaway points that you can remember from my sharing. First of all, the ESG is going mainstream. So start preparing information, start looking at a business strategy in alignment with ESG. Second point is there are business opportunities in ESG. We keep talking about ESG from the risk perspectives, but there are opportunities that you can start to explore more. Align yourself with different products, with different customer demands. So harness this opportunity. And finally, there are a lot of information, framework, guidance that are available out there in public space or as an expert consultant. Reach out to those resources that are freely available. So thank you.
Now, up next, ladies and gentlemen, to talk to us about the Salesforce journey, deepening our impact, we have with us from Salesforce.org, Head of Impact Engagement. Would you please join me to welcome Samira Han.
Good afternoon, everyone. Good afternoon, everyone. Please wake up.
Good afternoon.
I know the post-lunch lull can be quite, can put you to sleep, but hopefully we'll wake you up with this story. So I'm here to tell you a little bit about Salesforce's journey in terms of deepening its impact. So our journey as a company really begins with our core values. So if you look at our co-CEO, he truly believes that corporate purpose is embedded in improving the state of the world. It's not about profitability. It's not about shareholder value. So what does improving the state of the world mean? One, it means taking a holistic lens to well-being. 2, it means looking at each individual and their safety. And 3, it means safeguarding the environment. So if you look at our values, our core values, and our culture, they're around trust, customer success, innovation, and equality. So we really take this to heart. And even Benioff, in terms of his giving and his own personal approach, is very much concerned with societal well-being. So that all sounds great, right? But what does it really mean? How do we as a company, as a for-profit company, as a huge growing for-profit company with a global presence, hold ourselves accountable? So for us, it's very simple. Leading with impact means leading with outcomes. And what that means is we have to be as transparent as possible in terms of reporting our negative and positive impacts to society. So one of the key ways in which we do this is we put out an annual sustainability report. This may look very familiar to you and very common. In it, we report on our environmental, societal, and governance metrics. We also map back to the Global Reporting Initiative Standards, or the GRI standards. However, apart from just reporting on our negative impacts, one of the interesting things is we actually have a dedicated unit within the corporation that is focused on positive social impact. And that's where I sit. It's Salesforce.org. So Salesforce.org has 3 main portfolios. One is how do we use our core product so our underlying technology, which is a customer relationship management platform for social good. 2, we engage in strategic grant giving. In particular, we've chosen to focus on education and workforce development. And our third portfolio is around community engagement. So how do we really harness the talent and the resources and the passion that exists within Salesforce to have an impact in our local communities? Now, when you look at a theory of impact or what underlies our portfolios, you'll see that we've taken a more social sector approach. Usually when you hear theory of impact, you think of a nonprofit, or you think of a public sector or social sector entity. However, we decided, even as a for-profit entity, to take 2 steps back and figure out how can we really affect change for the beneficiaries and communities we want to serve. So with our technology, the core question we ask is this technology in fact transformative? Is it going to really change our beneficiaries' lives and change the way in which we operate in our communities as for-profit entities? 2, in terms of investments, the core questions we tend to ask are we actually furthering economic prosperity through our education and workforce grants? And 3rd, with our community, it's about depth. It's about, are we enabling our own people to give back as much as they possibly can? So one very interesting thing is that Salesforce has a dedicated amount of days and also a philanthropic giving program. So they are actually taking corporate resources and handing them to each employee to figure out how they best want to give back to their communities. So the stakeholder impact report that I presented earlier, that's quite common. A lot of corporations are engaging in sustainability reporting. But now what we've tried to do is take the portfolios that I mentioned to you and really hold ourselves accountable. So we've developed a framework to measure the impact of our social impact. And I know that's redundant, but basically we've set up a framework specifically for the Tech for Social Change platform. An example is, how effective is our technology making the nonprofits and social entities we serve? Is it actually enhancing the level of innovation that's taking place in the social sector by enabling social sector entities to connect with other partners? And finally, is it positioning particular entities for growth and leadership? So there's a lot that underlies each of these metrics, but for us, it's a start that we're actually applying a social impact measurement framework to our product itself. So I think this has come up many times today, the Sustainable Development Goals. We're all familiar with the Sustainable Development Goals as a shared blueprint for all countries, a shared blueprint across sectors. So this year in particular, we're really taking a look at the SDGs and figuring out where do we want to focus and how can we deepen Salesforce's impact on the SDGs. So we call it something fun. We call it SDG trailblazing. So if you look at the Technology for Social Change platform in particular, for us, technology and enabling and capacity building products are all about partnerships. It's all about SDG 17. So we really take a deeper look into how we're having an impact on partnerships and collaboration. If you look at our investment portfolio, as I mentioned, it's very much focused on education and workforce development. So that addresses SDG 4, which is quality education, and SDG 8, which is around economic growth and decent work. And when you look at our community of citizen philanthropists, which is what we call our Ohana or our culture, our employees, it touches all 17 SDGs because we have such diversity amongst our global offices. So it's really about taking the resources that they're giving back into the community and mapping those across all 17 SDGs. But as with some of you, we're just at the beginning of our journey. So the way we think about our journey is threefold. One is what you may have seen 5 or 10 years ago at a conference like this. It's more around marketing and brand and how you talk about impact and the sustainable development goals. That's the first phase. We're kind of past that now, and we're more in the reporting phase or the investment phase. So how do we generate investor demand for impact metrics? I was having a discussion with their sustainability team and asking them, so how often do you really get asked about social impact, for example, beyond the ESG metrics? And what I heard is very little. So we are actually trying to seed that demand so that it becomes common for investors to expect companies to report on social impact and the SDGs. Finally, the third phase, which we hope to enter in, let's say, the next 1 to 3 years, is around strategy and ops. So how do you organize your entire corporate function around social impact and the SDGs? How do you use it as a core metric to measure your success, and how do you hold your leadership accountable and make decisions based on it? So we've taken a crack, we're taking a start at our SDG mapping. We've done a mapping of our US customers to the Sustainable Development Goals, looking at their missions. We've looked at our employee volunteering in terms of number of hours, mapped those to the SDGs, and we've looked at our employee giving and mapped those to the SDGs. So this is just a start, but we're hoping to go deeper and more global with it. And this is from this year's Social Impact Report. But what we realized is our journey is great, but in order to really have an impact on the SDGs and deepen social impact across sectors, we absolutely must do it in partnership. So one of our core focus areas going forward is SDG reporting. So there's so many different frameworks, metrics out there. We'll hear more about them probably in this conference as well. We want to take a leadership role as a tech company in framing the discussion around sustainable development goals and measurement for our particular sector, working with other entities. 2, there's also increased mapping efforts. So people are taking existing standards such as GRI standards and mapping them back to the SDGs. We want to be able to, as a company, engage in that discussion and be at the forefront of using some of those techniques to map back to the SDGs, because the SDGs are a more overarching framework being used globally. 3rd, we want to be a key player in the expanding discussion around how SDGs are used to talk about companies, how they're being used to make investments, how they're being used to compare the success of different companies. But I think one of the most interesting parts of the sort of impact and SDG journey is actually our product innovation. And that's honestly why I enjoy working for Salesforce so much, is we're actually thinking really hard about not only how we can measure the impact of our product again, in the ecosystem, but also how we can use our product to help others, including our clients, deepen their impact. So last month we rolled out Sustainability Cloud. It was very exciting. It is an app and a cloud-based product that enables customers to measure their carbon footprint. I mentioned earlier that we have this technology for social change portfolio. The 3 core products are solely focused on the social sector. So we have the nonprofit software success package, which is around programmatic efficiency for nonprofits. We have a specific product called Education Cloud that's focused on K through 12 as well as higher education, and looking at traditional metrics like attendance, quality of education, communication amongst the administration. And then our 3rd product, which is a relatively new product, is Philanthropy Cloud. So really helping corporations themselves look at their own philanthropic givings and measure that better. Last but not least, a super exciting product that came out recently in the past few weeks is Uplink. This was a partnership between the World Economic Forum, Salesforce, Deloitte, and Microsoft. And it is an open source innovation platform for the SDGs. So in close, I actually wanted to leave you with a question rather than a takeaway. So there is no way that the Sustainable Development Goals will be met in the given time frame given the pace of things and how things are today. It's absolutely necessary for corporates to take greater leadership over the SDGs and to do it in collaboration. So we don't have all the answers, but one of the things we're thinking really hard about is how do we move faster toward closing the investment gap on the SDGs? And how do we attract more resources toward the SDGs? So we welcome any sort of collaboration or discussions or questions around that topic, because we are actively trying to look at the broader ecosystem and see how companies are trying to attract investment, because that's the only way that we're going to really meet the SDGs. I know that the indicators are written from the lens of governments in mind as opposed to corporates, so we're really trying to work hard with other players to identify what are those corporate indicators that can allow us to have a robust discussion on how to attract more investment toward the SDGs. Thank you.
Thank you, Samira. Please remain there. We'll see whether we got questions for you. Oh, yes, we've got one. I think it's first decide, right?
Yeah. So great question. We've been working on the SDGs through our product and through our givings for a very long time. But the honest answer is we mapped our SDGs in our sustainability reporting years ago. I don't know quite, the year, but only this year's social impact report is the first year where we're really, really taking a deeper look into the SDGs and figuring out how to measure it. So we're really at the beginning of our journey of going sort of public with our communications.
Now, from Samira, let's move on to Martin Rich, Future Fit Business founder and executive director. He's going to talk about creating a future fit society. We call this part one. Please welcome Martin Rich, everybody.
I think the reason they actually invited me was they had to go to the UK to find somebody who has a voice as deep as yours. I don't think I'm quite there. I'm going to work on that. You just have the greatest voice, my friend. Awesome. Well, look, thank you so much. A huge thank you to May in particular for arranging all of this. This is actually the first of 2 presentations. May was quite worried that you'll get bored halfway through what I'm going to say, so there's actually a coffee break. Okay, now that's not an excuse to run. I want you to come back for the second half. It's great to be following on from these last 2 presentations, because I think this builds on the grounds that we've just heard being laid out. What we're going to talk about for the first 20 minutes or so is, what does it mean to create a future fit society, a truly sustainable society? And I'm going to suggest to you that we need to take a new perspective. We need to take a systems perspective on creating a truly sustainable world. I'm going to talk about what that is. Then after the coffee break, I'm going to show you our framework, our toolkit, that enables you to actually do that as a business. It's a thing called the Future Fit Business Benchmark, and it's quite radical in that it's free. It's entirely free. You can download it today, you can start using it. So if that isn't an incentive to come back to hear about something that's free, I don't know what else I can offer you. Is that all right? Yeah, all righty, thank you. So, what is a future fit society? This is our definition. A future fit society will protect the possibility that humans and other life can flourish on Earth forever. How? By being environmentally restorative, socially just, and economically inclusive. This is the world I suggest that we want to create. If you're here and you're thinking, I don't know whether I want to create that world, I suggest you go and get your coffee now, because you're going to find the next 20 minutes very boring. This is a future fit society, one that is truly, truly sustainable. And if I have a plea, if you haven't heard of Future Fit yet, I guarantee you will hear more and more about us as we move forward. Please, can we all agree one thing, which is this is the definition of Future Fit. It's a great expression, but let's not water it down. Let's all agree that there is one destination we all need to be heading towards, this future fit line in the sand, the idea of a truly sustainable future. So if you hear anybody talk about being future fit and they're not using it in this way, tell them to stop or ask them, are you actually going towards a truly, fully, 100% sustainable future? If so, fantastic. Let's journey together on that. Now, we all know the problems that we're facing today. Other speakers have already talked about it. I'm not going to repeat everything that they've said. Here's just a representation of it, these hockey stick graphs. This is just like the biggest wall I've ever spoken in front of. It's amazing. I want this in my front room to watch films. This is all about the rampant change that we're seeing around the world. Okay, you only need to look outside every day, and you can see the change in the environment, in the weather. I believe until recently here, you couldn't actually look outside, or if you did, you couldn't see anything, right? A classic example of some of the changes that we're creating around the world that's causing these massive impacts on just daily life. This isn't theory anymore, it's reality. We know that things are getting out of control. But what do we expect? If you define the goal of society as GDP, gross domestic product, that society will do its best to produce GDP. It will not produce welfare, equity, justice, efficiency, unless you define a goal and regularly measure and report the state of welfare, equality, justice, or efficiency. Those are not my words. Those are the words of Donella Meadows, one of the great thinkers behind system science. That is often compressed into the statement that the purpose of a system is what it does. It's a brilliant definition. And the point is that if you design a system to do something, that is what it will do. Humanity and business are very good at very efficiently doing what you tell them to do. Nowhere in the world, when GDP was created back in the 1930s, did it set up welfare, equity, justice, efficiency. It wasn't designed to do that. It was designed to help America climb out of the Great Depression. Even the guy who invented it said, please don't use this as a measure of overall economic well-being. That's not what it is designed to do. What happened 80 years later, we've ignored that, and we now use it as the measure of success. Is it then any wonder that we have a society which is not equal, that is not just? Because that's not what the system was created to do. If we think about the world on a balance, again, this is Donella's very detailed set of things that can change the system. Okay, but just think about it in this way. If we're trying to change the world for the better, we're trying to pull down on this piece here, right? You all know how a fulcrum works. If you try to pull here, how much harder do you need to shift things, right? If you pull here, it's easier to get change, right? But the problem is, classical economics, the system that drives the paradigm we use to drive, right, where we could get good leverage. The problem is, that's all about maximizing GDP. It focuses on the dollar. That's what matters, shareholder value. Damn everything else. And the problem is then that leads to short-term profit chasing. You externalize the social and environmental costs. Because if you externalize them, somebody else pays. You don't. Your share price does better. And then policy follows on from that. It fosters and encourages that type of spending, tax cuts, interest rate tweaks, all of that type of stuff. None of this is seeking an environmentally sustainable or socially just future. But what if we were to change the paradigm? What if we would change to a future fit mindset? Instead of maximizing GDP, we would maximize good growth. We would target on raising well-being, restoring natural ecosystems around us. Instead of doing short-term profit chasing, we would chase long-term value creation in its broadest sense. Action that took us to new places would be rewarded and encouraged. And policy would foster this type of regeneration. Taxes would be used and encouraged to move us in the right direction. We even heard the minister talking a little bit about that this morning, about using tax benefits to help encourage people to use renewable energy. Fantastic. A little isolated example of what I'm talking about here. How do we change everything that we're thinking about to this idea of a future-fit mindset? Because only when we do that are we going to get anywhere close to these. Samira, thank you. Your talk ended beautifully in just rounding that up. We're not going to achieve the SDGs with where we are today. I would argue we're not going to achieve them if we don't change our mindset and we don't start looking at the world in this type of way. So we need to rethink what we mean by value creation. We need to move away from this concept of shareholder value, where you externalize all of the costs. This leads you to saying things like, well, we're contributing to the SDGs because we create jobs. Or we're reducing our year-on-year emissions. Those aren't bad things. But they're not taking us anywhere like in the right direction. If they were, we would already be there. We would not be in the mess that we're in today. This is classical economic thinking. Now, in the 1990s and the early noughties, we moved towards this concept of shared value. We began to draw these various elements together. And we began to see the overlaps as areas of advantage, which is good. And we can say things like, well, we're positively impacting SDG 3 because we sell healthcare drugs. Or SDG 12 because we sell consumer goods. Well, okay, selling consumer goods might be beneficial in some ways. But again, what about all of the negative impacts of them? The packaging, the sourcing, what happens post-use? So it's still not the complete picture. We need to get to this point where we think in terms of systems, system value, as we call it, where we realize that for business to flourish, society has to be flourishing, and for society to flourish, the environment has to flourish. As somebody once said, there is no business to be done on a dead planet. So how do we start to think about pulling all of these pieces together? Where we can say things like, we're transforming our business to solve a key sustainable goal challenge, whilst working to ensure that we're not slowing down progress anywhere else. It's all well and good educating women and children over here, but if we're burning pandas and rainforests over here to power that, there's a bit of a trade-off there that's not necessarily a good one. How do we ensure that we're doing the education, but how do we also ensure that we're not doing the damage over here? We have to make sure when we're looking at the SDGs that we avoid the SDG washing of going, hey, look, great shiny things. I'm doing all of this good. Please don't ask me about the dirty stuff that's going on over here. Now, the reality is most of your businesses are doing a bit of both at the same time. I hope and I expect that most of your businesses are adding purpose to society. You're doing some good. Great. Let's understand and accelerate that. Unfortunately, I guarantee you, your businesses are also doing some harm. As one of the other speakers said earlier, we damage the environment just by being alive. Okay, let's recognize what that harm is, and let's start to identify, to reduce, and eventually eliminate that harm. So we can bring these three circles together, and we can start to think about business residing within society, residing within the planet. I'm sure you've all heard the expression, what gets measured gets managed. Yeah? Fairly common expression, came from the academic V.F. Ridgway back in the 50s. Unfortunately, what most people don't know is the second part of his quote. Even when it's pointless to measure and manage it, and even if it harms the purpose of the organization to do so. Let me give you a quick example. In the UK, in our National Health Service a while ago, they identified the need to reduce waiting times, particularly for accident and emergency submissions. Fantastic, reducing waiting times in hospitals. Who is not going to think that's a good thing? And lo and behold, they did it. Unfortunately, it was later discovered that across the same time, deaths from emergency heart attacks went up. And it was later recognized that the reason for that was because so much spending and focus was put on reducing waiting times that the funding was taken away from the things that would have identified and potentially stopped these deaths from heart attacks. So now an agency whose very mission is to protect and save lives, instead of doing that, had ended up just shortening the time in a queue. A complete travesty. Nobody set out to do that. That wasn't deliberate. There was no doctor or nurse who deliberately said, I want to increase deaths whilst reducing the queue. But by measuring the wrong thing and focusing on the wrong thing and rewarding the wrong thing, they got the wrong outcome. Very, very salutary tale. So if you are measuring stuff to manage it, are you sure you are measuring the right thing in the right way and that you're not ignoring the things that really should be measured? Are you setting the right goals? So when it comes to setting the right goals, the way Future Fit looks at the world is to say, well, where do we actually need to go then? We've heard all of this talk about different things, but what do I need to do? Where do I need to get to? Well, what we say is, to start with, stop looking backwards. If you're going on a journey, you don't sit in the car and look out the rear view mirror. Maybe you do in KL, because the traffic here is really terrible. But ideally, you want to be looking forward, right? Yes, where you've come from tells you something, and there's value in that. But you don't set a journey by looking backwards, nor by looking sideways. Looking at what your peers is doing is useful to an extent. It tells you how you're tracking against the rest of the market. But it says nothing about where you are going. It simply drives towards being less bad. My business only killed 5 people this year, but it did better than the industry because on average they killed 6. Are we measuring and managing the right thing there? I'm not so sure. And progress towards short-term goals is very useful, but only if those short-term goals have been set in the context of where you should be going. If that goal is on the journey towards your ultimate destination, fantastic. But what if it's not? And if you don't know where your end destination is, then how do you know that that short-term goal has taken you in the right direction? If we are to understand the full story, we need to assess our progress towards what we call extra-financial break-even point, the social and environmental break-even point of the planet, of society. You all understand, if I talked about financial break-even, you'd all know exactly what I meant. You would all know that as a business, you have to make more profit than loss over time, right? You can make a loss for a period, but eventually you need to be making profit. Otherwise, your business will fail. And by the way, I've nothing against that. Future Fit has nothing against that. We want to see businesses flourish financially. But here's the thing. We've been trading at an environmental and social loss pretty much since the Industrial Revolution. We've been treating the planet like one huge garbage bin. We've been treating individuals like slaves for so long that we don't know now how in debt we are. We need to start very quickly turning that deficit around, and we need to start trading in environmental and social profit, not in dollar terms, but in terms of what planet and society can withstand, the planetary boundaries, the social conditions that we need for flourishing. We need to get back on the right side of that equation very quickly. We need to recouple financial success with environmental and social success. We need to understand what this line in the sand looks like, and we need to very quickly start driving ourselves towards it. And after the break, I'm going to talk about how our framework enables your business to be able to do that. So as we head into the coffee break, I'm going to leave you with one of our favorite quotes from William Gibson, the author, which is, "The future is already here. It's just not evenly distributed." That's the thought I'm going to leave you with over the coffee break. I don't know if there's any questions that have come up before we dive into that, but I'm very happy to take some if there are.
No. No questions for now. Questions will be after your second part.
Fantastic.
Okay.
In that case, should we hold it there and grab a coffee?
Yes, we shall go for coffee. I would gladly skip coffee to listen to the second half, but we want everybody else to come back.
Thank you very much.
Thank you. Give it
Fantastic.
up, Martin
Thank
Rich.
you.
After coffee, we'll have him back.